Mueller from Stewart-Peterson is our corn and soybean market analyst this week. The USDA's December crop report, released Wednesday, was fairly mild. The agency made no changes to ending stocks in soybeans and wheat, but it did raise corn ending stocks 25 million bushels. The agency also projected a 50 million bushel reduction in corn exports and a 25 million bushel increase in corn for ethanol use. We talked with Nick here Thursday afternoon and began by asking for his thoughts on the USDA's latest estimates.
Supply and demand numbers, as usual, were pretty neutral for December. We lowered exports by 50 million bushels. We probably need to take another 50 million off eventually, but we upped the crush by 25 for ethanol, and we'll probably see it up another 25 when all is said and done.
All right, tell me about where we're seeing price movements this week. It was frustrating because it felt like we had momentum going to close out last week, and this week, especially beans took a huge hit. Where was the weakness coming from?
Yeah. The bean chart started looking really positive from a technical standpoint. You had the MACDs flipping bullish. We were pushing up into the Bollinger Bands, and those were starting to turn up. We closed above the 100-day moving average, and producers did what they should be doing. They started to sell, and then that means the commercial turns around and hedges that. And then once there was any weakness in the market and that support line started getting taken out, I think anyone who made profit being long on that run took their profits before Wednesday's supply-demand report.
We also saw some weakness in the overall stock market, crude oil especially falling to multi-year lows. Do you think crude oil, as low as it is, has a big impact on either corn or soybean markets?
I think all markets in general, yeah. I mean, the low prices at the pump, don't help corn prices. Crude broke some pretty major support. It's going to be a really interesting market. I think it will stabilize. I don't think crude stays down here long term by any means, but how low it can go, that's a good question.
Is it a threat to profitability for ethanol at all?
Absolutely.
How big of a threat?
I guess it would depend how long it would stay down here. I don't expect it to stay down here that long, so I don't think long term it has a major effect. I think crude's much happier in the $40 to $60 range than down at these pretty unbelievable levels.
What's your forecast for production down in South America this year?
Right now, everything looks pretty good. Things can change. We're still in a growing season, but right now I would say it looks like they're going to have a big crop. On the export side of things, they're going to export just as much as us this year, so that has an impact. They have as much impact on world price as we do for the first time in a long time.
Why has Brazil become so competitive in that export market?
The strong dollar is definitely a factor there, as well as infrastructure's gotten a lot better. So, all those factor in. They're a more reliable exporter than they've ever been.
Argentina's new president took office today. Do you think that long term this could shift how Argentina is a player in either corn or soybeans?
Absolutely. I think we see the export tax come off the grains right away. I would expect the export tax for beans to be lowered by about 5%. And then the big question, I think our bean prices, I don't think we see January breaking 865 unless they decide to devalue the peso right away. I don't expect that to happen. I think it will be incremental, so we should see support with beans right now. If they would do that, which I'm not expecting, though, we'd be down at $8 in a hurry.
Can you explain kind of what role that plays, why it would have such a big impact?
Well, it would make us even less competitive on the world market, and they would be very competitive on the world market, and it would just shift even demand further away from us.
What are your cash targets right now for trying to sell some corn or soybeans?
Corn and soybeans, I like selling anywhere in the upper level of these ranges if you're looking to move it before the first of the year. I think we might get some strength into the first of the year. Right now, when you look at the index funds, they don't have a very long position. That becomes an opportunity to the upside. You look at managed money, they're net short corn and beans. That becomes opportunity to the upside. I don't see them wanting to carry a heavy net short into the beginning of our growing season. So I'm hoping we see some strength into the end of the year, into January. I think new crop corn will have the opportunity to be pricing between $420 and $440. And given the fundamentals, I think that's a price that needs to be defended. And I'm hoping we get there by January sometime, because if South American weather stays like it is, they're going to be coming on board in March, and it's a futures market. They'll be looking at it by early February.
And in soybeans for the futures market?
925 to 975. I know that it's a pretty big range, but given the fundamentals, if we get those opportunities, I think we need to defend those prices.
We know the U.S. right now is in a historically strong El Nino. If that would flip, or just tell me how, for the forecasting of prices, how that's impacting what you believe will happen next.
Yeah, what I've been talking to my clients now, I mean, when we look at where the market is, we're at pretty low prices. The volatility's come out of options, especially call options. And now's not the time to be buying puts. I'm not interested in adding to my hedges at this point for 16. And given how strong the El Nino is, if it flips to a La Nina, we could see a really strong one there as well, and could look at, possibly a 25% drop in production. It's all going to depend on when it flips. If it flips in August, it's not going to harm us at all. If it flips in June, we're going to be at $5 corn in a hurry. So I look at 450 calls. They're 15 cents or under at this point. That seems like a cheap investment that will allow me in the future to be aggressively forward contracting or hedging 420 to 440 corn, knowing if we get into a weather market, all those bushels are already covered up.